Logged into the test portal, let me just give a recap of what we are trying to achieve with our FlowTrader session. The idea here is that many students learn about finance and learn about financial markets without really having a practical understanding of what goes on within some of the world's largest financial institutions. So we've developed a simulation that takes candidates through a practical experience of the different roles involved. Core to this approach is to divide a group of students into the sell side and the buy side. So by the sell side, we mean institutions like Bank of America, Goldman Sachs, or JP Morgan. And on the buy side, these will be asset managers, insurance companies, pension funds, or hedge funds. Within each side of the desk, there's a number of different roles that the students will experience. So on the sell side, they'll get to understand what a sales trader does and why client relationships are so important. Also on the sell side, they'll be able to operate as a market maker. So this is all about managing risk, helping facilitate trades. On the buy side, the candidates will either work as a portfolio manager or an execution trader. You have a demonstration login for the platform IB1 Test 1. Once you've put the username and password into the boxes, please click Login. Now you'll be offered single user or multiple user. When this is run normally, a candidate will choose multiple user and then they will select their role, either market maker or sales trader, if on the sell side, for example. Here, for this demonstration, I'd like you to choose single user. This combines the role of sales trader and market maker in order to give you a more efficient overview. When you first log in, you'll see that there's 7 steps to take you through what each of the widgets do and why they are there. Please do click through, and once you've read the content, select I am ready. Here, I've logged you in as an investment bank market maker and sales trader. Now, just to explain how this works, on the top left, you have the different products that the candidates will have access to. They would have already received documented research on these products, what they mean, and the fundamental drivers behind these products. You can see we've got equities, bonds, and commodities. In terms of the prices, here you've got reference prices. This platform can either use up-to-the-date live market prices, so plugged straight into the exchange. However, the candidate's activity on the platform will actually move those live prices away from the real-life price to reflect the student activity on the platform. So it can, in itself, become a contained simulation. We also run repeats of major market data. So some of our clients, for example, will say they want their students to retrade the day that Lehman Brothers went bust. Or some of our banking clients want the candidates to relive the European debt crisis to see what would they have done and how would they have acted when there was such volatility in government bonds. So these, you have the products. Very importantly, you can see on the right here, you've got product type. So a product type can either be order driven, that has an O after it, or quote driven, that has a Q. Understanding whether a product is order or quote driven is absolutely crucial to understanding how financial institutions work and how risk can be managed. This is something core to the student session. Just along, we have the news, therefore. If you click on the news, more detail will come up, and it's this news combined with the research that will give the underlying movement to any asset price in a canned simulation. You can see the positions, current position that you might have on, as well as the quote board. Now on the bottom left, this is where a lot of the action happens in terms of speaking to clients. And just in the middle here, we've got an exchange or interdealer brokers, 2 different types of ways the bank can trade. Let me take you through a quick session in terms of how the structure would work. I've actually logged into this window as a hedge fund client. So I'm just going to leave this window open. Now, if you remember, this would be, if you like, on the other side of the room. These are the students who are operating as the clients. And they have a certain amount of funds that they need to invest. In this case, it's 10 million. So one way I can invest that money as a hedge fund client is I can go direct to the exchange. Let's say if I want to trade 100,000 contracts of sterling petroleum. You can see in the exchange, I would be able to buy at 39 or sell at 26, which is very wide. It's very wide because it's a very large trade. If I move this down to 10,000 contracts, for example, you can see the spread goes to 31, 34. If I move it down to 1,000 contracts, There's almost no spread here whatsoever. So core concept to understand in terms of liquidity and market depth. This is the reason why investment banks exist. As the hedge fund, ideally I want to buy 100,000 contracts of this product STIR, but if I did so without an investment bank, I would be paying the price 39, which is very high, so I want to avoid that. So how can I do so? Well, I can click on an investment bank. Here's a sales trader, and I can start a conversation. Hi there, in this case. Or I can simply click call, and this is when candidates will speak directly to each other. So the request, I'll say, hi there. I would say, I am looking at STIR, for example. Please make me a price for 100,000. Okay. This is therefore on the other side of the desk what the investment bank receives. There's the notes from the client. Now a good sales trader will probably immediately call the client to talk through this trade. What's interesting about what we're doing here is we're measuring every time any of the candidates make a phone call, make a communication by typing, every time they touch the platform or manage their risk. We're taking data on that candidate to assess their performance, both in terms of technical skills. So for example, for the sales trader, we're measuring the effectiveness of their communication. How clearly are they speaking? How long does it take for them to achieve a desired aim for the bank using their voice or using their fingers by typing? This is quite interesting for many of our investment bank clients because they're interested in who is able to pick up a phone and build a relationship with a client they have not yet met. So here we've got the message from the client saying, I'm looking for a STIR volume of 100,000. What would happen here, as in real life, is the sales trader would shout over to the market maker, and the market maker would probe the exchange. That's this in the middle here. And that's then saying, okay, what would the client get without me? They would be able to buy at 39 or sell at 26 in this example. The market maker, however, already, in this example, has a short position of sterling on their books. So here what we're teaching them is to say, look, if the investment bank is already short, and you have a client that's asking for a position in a product that you're already short, then it's in the investment bank's interest if the client now sells, which means the bank now buys. Okay. So the market maker might say something along the lines of, okay, give them a bid of 33, and this is what the sales trader will type in whilst he's talking to the client, but give them an offer of 40, and we can make that for 100,000. You can see here, compared to the price in the middle, which is 33.1, the bid here is much, much closer to the market price because the investment bank is incentivized to buy here. Okay, so they send the quote, and the client here will receive the quote. So even though I know that the price of sterling petroleum is 33.1, for this very large trade, rather than going into the exchange, where I would have to sell at 26, which would be a very bad, very low price to sell at, through this investment bank, I can now sell at 33. So I click sell, 100,000, sell. That is done. I now have my position of risk, and the investment bank now has their position of risk. I'm now long as the investment bank. I was short 8,000. The client then sold 100,000, which meant that I bought 100,000. So now I'm long 92,000. So very interesting. That's the trade done. Now it's the market maker's role to try and use the exchange to get out of this risk. This is just what would happen in real life, breaking up the trade into small chunks to feed it into the market. Or the sales trader, the next person that the sales trader speaks to, if they can find somebody, if they can find a client to do the opposite to what that previous client did. So if you remember, the previous client went short, which means sell, if we can now find a client to buy, by the client buying, we have to sell. And that's what I want to do as an investment bank because I'm already long, I've already bought. So if I've already bought something, if I can now sell it, then it gets me out of a position of risk. And this is core to the understanding of the whole simulation. Understanding that what an investment bank does is very different to what an asset manager does. A market maker at an investment bank, it's their job to manage risk, to provide prices to the sales trader who can then get commission, but once they've done so, they have to try and get out of risk. Whereas somebody that works for a hedge fund or an asset manager, of course, it's their role to get into risk. So very different perspectives that's important to understand. Now, what's interesting about this platform is we're measuring everything they're doing. So every time they communicate or type to each other, we can bring in new regulation, new compliance, code of conduct, so we can see if they are operating in a way that dictates their performance compared to the new regulation like MiFID II, for example. But we're also measuring how the market maker moves their bid and offer in terms of, are they managing their risk in the correct way? What is their risk appetite? What is their discipline? What is their resilience? When it comes to measuring the sales trader performance, we're looking at, as I said, the effectiveness of their communication, but also their persuasiveness. Are they able to use their relationships to find the right client to execute a trade that's in the benefit of the bank? All of this data gets recorded at hundreds of universities around the world. Not only does the student then get a practical understanding to really get to grips with what is it that goes on in the financial industry, they get to find out, if I am going to work in the financial industry, what role would suit me best? And they also then get noticed by some of the world's biggest banks who might miss their universities in order to find the next big or best market performers. Okay, I hope you found that a brief and interesting review. Please do have a play around with the platform, but do bear in mind, obviously, this is really something that works when you've got many, many people logged in, all talking and communicating and making market prices between them. Thank you very much for your time.